What's going on, duties? I hope that you're having a good one. I know I am, because the old stock market is finally in the green. You know what? A little bit of some indoor applause, because the bull camp is finally showing some signs of life. To make it even better, the crypto market still holding in the green, but mainly in this video, I want to discuss what you should be paying attention to for the remainder of this week, because we have a lot of macroeconomic announcements, we have a lot of earnings, and a lot of, we'll say, interesting price developments. On top of that, I have a couple additional things I want to get into. Even though the stock market was very green today, Tesla got absolutely murked, so I want to discuss why. And then I also want to get into the zero DTE strategy that a lot of you have been paying attention to on the stream, because as of today, as of me filming this video, it is officially on a 22 win streak. So hopefully it will be continuing even higher in the future. With all that being said, if you enjoyed these type of updates, obviously don't forget to like, comment, and subscribe. And with that being said, let's rock. By the time the closing bell went dingity ding 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 today, Monday, October 30th, here was the official headline. Stocks rebound to start week, Dow rallies 500 points for best day since June. You know what? We should take the wins when we have them, because the past 2 to 3 weeks have been pretty brutal. So the fact that today was green, hey, I'm definitely going to take it. And for those of you who want to know how green it actually was, this is how green. The only one that was red was Tesla. And yes, I'm going to be getting into it, but look at this. Usually when we're calling our mom, our grandma, and our great grandma, it's with bad news in the stock market. Today, we should call them with just a little bit of glee, a little bit of happiness, letting them know that yes, YOLOing calls finally worked out. Now, before we get into this and the seasonality and all the other news, I do want to quickly talk about crypto, the other thing that's been in the green. And also don't forget that Sam Bankman-Fried, the disgraced previous CEO and founder of FTX, is still facing his criminal trial. And the headlines from this court case, they make my day. They are absolutely laughable. Check out today's. SBF, Sam Bankman-Fried, says he called, quote unquote, some of the shots as FTX CEO. This is the game of when everything was working.
Look at me, I'm so great. I'm giving away all this money. I'm a billionaire whiz kid and everyone should bow down to me.
And now he's playing the game of, I think everything I did was legal. These are actually statements from Sam Bankman-Fried. He thinks everything he does was legal. He thinks he was legally entitled to taking the funds from FTX and giving it to Alameda. And now he's basically just blaming everyone else. Now, I'm no lawyer. I don't speak legalese. But according to the people who do, the defense for Sam Bankman-Fried is it's doing worse than falling flat on its face. So I'm very curious to see how bad his sentencing is going to be when this all wraps up. But since we're talking about crypto, I do want to dive into old Bitcoin just because it's rocking right now. Here's a look at Bitcoin. Not long ago in September, trading at 26K. And then recently, as there's a bit of optimism, a bit of, just excitement because of potential regulatory hurdles being cleared with the spot Bitcoin ETF, old BTC is ripping, and really the whole crypto spheres. If you look at ETH, if you look at Solana, if you look at Pepe, if you look at Doge, if you look at any crypto right now, they're generically doing pretty well because a rising tide raises all ships. And we have Bitcoin, the granddaddy of them all, running from 25K all the way up to almost 35 recently. And for me, I think if we get above this, I'm looking at 37, 38, maybe followed by 40, 42. And yes, I own Bitcoin, but I don't actively trade it. So even though I'm watching these levels, it doesn't really matter to me because it's a long-term investment. So in the short term, it doesn't much matter, in my opinion, of where it goes. I just wanted to discuss it for those of you who might be some more active traders. But right now, the crypto sphere, maybe they're right when they're saying that the crypto winter is finally over. So just wanted to quickly cover that. Now let's switch it back to the old stock market. I just want to remind you, since we're about to conclude 1 month, October, and kick off November, here's the seasonality. 1/3 of the way through October until about pretty much halfway through January, the seasonality, how the market has historically performed, generally favors the bulls. Now, I say generally, I'm not saying all the time, but if you look at the past 20 to 30 to 40 years worth of data, you'll find that this period, even though, yes, once again, it's not a 100% guarantee, it does typically favor the bulls. Now, even look at it this period, and this right here is saying the back half of October should favor the bulls. This time around, it hasn't. So even right there's a bit of a counterexample, but I just want to give you a little bit of a framework, and as I like to think of it, how the deck is stacked in whoever's favor. From a seasonality perspective, the deck is currently stacked in the favor of the bulls. That doesn't mean that they're necessarily going to be dealt aces, but I just want to let you know where we're at. And obviously, as every year passes, you have different things to consider. Like this particular time around, we have a lot of earnings going down thus far, a mixed bag, more so favoring the bulls, but we also have a lot of major macroeconomic updates. But first, let's talk about those earnings. This week, another week of earnings. It'll be continuing for about 2 to 3 weeks after this. But after this particular week, a high majority of the S&P 500 and NASDAQ is already done reporting their earnings and going through their guidance and their announcements. The only major one after this that probably a lot of you are paying attention to, in late November, we will be hearing from NVIDIA. But besides that one, after this week, most of the major ones have already told us their numbers and their future looking guidance. So anyway, this morning, we heard from SoFi, we heard from McDonald's, looking pretty good. Tomorrow before the market opens, Pfizer, Caterpillar, JetBlue. After the market closes, AMD. Later on this week, Norwegian, CVS, PayPal, Roku, Qualcomm, Palantir, Shopify. Apple's obviously going to be the major one. DraftKings, Carvana, Starbucks, Coinbase, Cloudflare, and Fubo. Feel free to screenshot this. Feel free to check out @eWhispers on Twitter, but these are the major earnings to pay attention to. Thus far, this particular earnings season, the only 2 major tech companies that clearly fell flat on their face, at least thus far, was Tesla and was also Google. Other than that, people have been pretty optimistic, either good earnings, mixed bag, or just a straight out beat. But the 2 that did particularly bad were Tesla and Google. And if you take a look at Tesla, its sell-off is not getting any better. So after its earnings report, it took a nosedive from 242 all the way to today around 195. And part of that was sped up by this report right here. Tesla shares dropped 5% on Panasonic battery warning, down 18% since Q3 earnings report. As they say, when it rains, it pours. Tesla shares declined around 5% midday Monday after updates from Panasonic, its long-standing partner and battery cell supplier, stoked concerns about sluggish demand for EVs once again. On an October 18th earnings call from Tesla, the CEO, Mr. Elon Musk, obviously we all know him, said Tesla was focusing on cost-cutting and keeping prices as low as possible for car borrowers in the face of higher interest rates. Tesla short sellers have made more than $3 billion. That's a lot of dough. Since the company's third quarter earnings call, according to the data from Ortex, really the earnings call is what made it get particularly bad. The earnings report itself was not so good, not so bad, a little negative leaning, but it was the earnings call where Elon got onto the phone and was as pessimistic as you can possibly be that really caused Tesla to sell off. And now with this news from Panasonic, it's making the situation a bit worse. Now, obviously, in the long term, I am still a big Tesla supporter. Long term, I think it has a lot of potential, but that doesn't mean in the short to medium term, it's just going to be green ripping to the high heavens. That's not how the stock market works. So as things most likely in the short term continue to get kind of bad for Tesla, I'll be looking at this support around 180, followed by 165. And if it gets particularly bad, and this is where I would most likely be a big buyer of Tesla, closer to 150. So just want to let you know what's going on with this particular equity, paying attention to that. But obviously all eyes are going to be on Apple later this week after the market closes on Thursday, when we finally get their earnings, and everyone paying attention to the tech sector of the stock market is going to be listening to Apple's guidance. Now, on top of that, we have a lot of major macroeconomic updates this week. Now, before the market opens tomorrow, Tuesday, October 31st, I hope you're watching this in time, we get the CPI, aka the inflation report out of the Eurozone. That's an important one. And then also the CB consumer confidence that comes out a half hour into the trading day. And then the party, even though it's already rocking, really gets going on Wednesday. That's when we're going to get the non-farm employment change, the ADP number that comes out before the market opens, the JOLTS job openings. But really at 2 p.m., that's when we get the results of the FOMC meeting. And then the chairman of the Fed, Jerome Powell, will be speaking at 2:30. All these times are in ET, just so you know. But this is where they decide what's going on with the next Fed fund change. Most likely, as of now, nothing's happening. There is a 98.2% chance that we stay at the current rate of 5.25%. So that's not going to be the surprise. When they announce 5.25, when they announce that we're unchanged, that's not what's really going to be moving the market. What's really going to be moving the market is basically how everyone interprets, how the market interprets what Jerome Powell, the chairman of the Fed, does say or doesn't say. Is he going to continue to echo the rhetoric of rates higher for longer? Is he going to be even more hawkish, or is he going to come off a little bit more dovish? That goes down at 2:30 this Wednesday. And also on that particular day, we're going to get even more updates. Treasury to borrow $776 billion in the final 3 months of the year. So this announcement came out today. Let me quickly explain that and then really connect how this all matters for the remainder of the week. The US government's borrowing needs will decline slightly in the final 3 months of 2023 from the prior quarter. Excuse me, I'm kind of chuckling because they only need to borrow almost $1 trillion. A potentially important development during a turbulent time for the global bond market. The Treasury Department said it will be looking to borrow $776 billion, which is below the $1.01 trillion it privately held marketable debt and the department borrowed in the July through September period, the highest ever for that particular quarter. So I guess the fact that they came in below $1 trillion, the market's like, hey, that sounds good. But connecting it to the importance of the remainder of the week is right here. The big bond market event Wednesday is at Treasury, not the Fed. So obviously at 2 p.m. we get the FOMC result and Jerome Powell will be speaking at 2:30, but also going down on Wednesday. The Fed's policy statement is setting up to be the number 2 event on Wednesday, with investor focus instead likely to be on the Treasury Department's new borrowing plan due hours ahead of the interest rate decision. So the TLDR on this is Wednesday is going to be buck wild. The so-called quarterly refunding announcement will reveal the extent to which the Treasury will ramp up sales for longer-term debt to fund a widening budget deficit. Those securities have been tumbling for weeks, even amid signals from the Fed officials that they're quote-unquote at or near the end of rate hikes. The sell-off has sent yields to the highest level since before the global financial crisis, making long-term treasuries more costly from the government. Investors are eager to see whether officials maintain the pace of increase in longer-term debt sales they announced in the August plan. Bumpy auctions for some securities in recent weeks have only increased that focus. A couple weeks ago at 1 p.m., there was a random vomit in the market, and that was actually because when the Treasury was trying to sell 20-year bonds, they were left with a supply, and everyone's like, that's not a good deal. I think they were left with about 18%, and the market's like, wow, there's a lot of people in the market right now with serious money who are being more cautious than we anticipated, and that thus caused the market to go down. So this is all happening on Wednesday. We're figuring out what's happening with the Treasury and their announcement. We're figuring out what's happening with the Fed and their announcement. And then later this week, particularly Friday, we get the unemployment report. So as you can tell, this week is just going to be packed with macroeconomic updates, a lot of major earnings, and also just price action itself. Now, if you want a place where this is all just kind of kept together in like one nice cohesive thing, check out the newsletter, Kohrs.locals.com. I break down what happened in the previous week and what I'm looking forward to in the upcoming week, all the major macroeconomic events, all of the earnings that I think you're going to care about, and then I give you the seasonality for the individual days. Today was neutral. Tomorrow, Tuesday, also neutral, just on a seasonal basis. And then Wednesday, Thursday, Friday, all favoring the bulls. And also, since we're here, I just want to talk about the options strategy, the zero DTE strategy. 2 weeks ago, we were batting 1,000. Last week, batting 1,000. Add all that together, it was on a 20 win streak, but I have even better news. Officially, as of market close today, the zero DTE strategy has now officially gone for 22 trades in a row. We are beyond a hot streak. So make sure you tune into the live stream to check this out to see if we can hit 24, 26, 28. Really, I want to conclude the week and hit 3430. That would be absolutely phenomenal. On that note of just what's going down with the market, I do want to talk about the SPY and some important levels. If you were hanging out in the Sunday stream, or if you were hanging out in the live stream this morning before the market opened, I was telling everyone how I actually favor a slight bounce here, just because seasonality favoring the bulls. We see overextension to the downside. And at a certain point, you're just thinking, well, maybe mean reversion is going to play itself out before the rest of the week really comes and decides if we're going up or down. And that's exactly what we got. If you look at the market right here, I like to call this a classic V-shaped reversal. We're selling down, down, down. And then you have this 3-bar structure, which in the middle, you have the high and the low, which are both lower than the left and the right, the high and the low there. So you get this V-shaped structure. And what I'm looking for is a return to, if it holds and continues tomorrow, 417 followed by 420. If this is rejected, I'll then roughly be watching 414, 412, and then this will be followed by 409 and some change. So even though it seems like maybe, just maybe, the bulls have regained a little bit of control in the market, in reality, it doesn't matter. Just play the price action, play the trend. The trend is your friend, so always stick with it. Don't fight against it the way I was on stream this morning, because that's how you lose money. The trend is your friend. That's what I have for you now. I'll catch you in the stream tomorrow. I'll catch you in the update tomorrow. I appreciate your time. Hope you enjoyed the video. Don't forget to like, comment, and subscribe. I'll catch you in the next one.
Peace out.